Hi everyone, it's me again, Kaisel Diplomo, and today I will be talking about the basic information about financial statement. So what is financial statement and why is it important? First, we will try to connect financial statement in our daily lives. Let's say you have a monthly salary of $3,000 and you want to buy a new phone that costs $1,500. Would you right away buy a phone? Of course, you have to be aware of some of your expenses such as your housing rent or mortgage, your utilities, your groceries, your insurances, transportations, and even entertainment. Did you think that with all those expenses you should buy a phone? Or maybe you can save some money to buy other things or to buy more important things or the things that you need. So basically, it is important that we understand our finances, our choices, or how to budget and track our money. Or if there's a savings, for example. So these are just some of the factors that we consider. In simple terms, financial statement is like a report where we track our finances. So in business terminology, financial statement is used to track the financial performance and health of the firm. And there are four primary financial statements. First is the income statement. Second is the balance sheet. Third is the statement of owner's equity. And fourth should be the cash flow statement, or what we call the statement of cash flow. In financial statement, income statement is the first step. So income statement actually present the financial performance of the firm within period of time. And income statement has three parts: the revenues, the operating incomes, and the net profit or the net loss. So in the income statement, let's first talk about what is revenue. Revenue includes the total values of goods and services sold. And from the revenue, we can also get the gross profit or loss, where it is a reflection of how profitable the firm's performance was in its business. So from the revenue, we can deduct the sales return and allowances, and we will get the net sales. Then from the net sales, we will deduct all the cost of goods sold. So this includes direct labor, materials, and production overheads. And we will now get the gross profit or loss. Next part of an income statement is the operating income, where operating income is equal to gross profit or loss minus the operating expenses. Where in operating expenses, these are like building rents and utilities, property taxes, wages and salaries, and other overhead costs. The third part of income statement would be the net profit or loss. It is basically the total business makes after all the deductions from the gross sales was made. So basically, net profit is equal to the operating income minus all the interest expense and income tax expense. The second part of financial statement is balance sheet. So balance sheet is like a snapshot that portrays the financial status of company at the point in time. So balance sheet is divided into three sections, and let's say the balance sheet is like a seesaw. And seesaw, it should be balanced. So all the assets must be equal with the liabilities plus the owner's equity. Wherein assets, these are owned by the organization, while liabilities, these items are owed by the organization. And the owner's equity is what the owners actually own after paying off all the debts. Next part of financial statement is the statement of owner's equity. So equity represents the ownership of the firm. So in this slide, owner's equity is equal to the common stock, which represents ownership in the firm, plus the retained earnings, which is a portion of profit that is kept in the business. So the final part of a financial statement is a cash flow statement that provides the cash inflows and outflows of a company within a period of time. So cash flow is basically composed of three parts: the operating activities, which are used or generated by the day-to-day operations of the firm. Next is the investing activities that includes investments in other firms as well as investment in the firm itself, such as machinery, land, or other fixed assets. And lastly, financing activities, These are used to provide funds to run the business. And that's it for today about the basics of financial statement. Thank you for watching.